Hi everyone, I'm Ken from Crypto Trading KS. If you're new, welcome, and welcome back to our regular community. Let's run the numbers. Bitcoin currently trading at 4471, up 3%. Ethereum 2790, up 3.71%. Let's have a look at the Ethereum tokens. Theta doing quite well, up 15.45%. Uni doing well, up 9.04%. Just like to let you know that 7 days a week I share my knowledge as a full-time technical trader with over 20 years of experience to assist you to be more of a financial blessing to yourself and those you love. Maker up 10.35%. FTT up 7.37%. I've hidden knowledge gems throughout this video. Unless you watch to the end, you'll miss them. See how many you can find. Rule 222, be kind to others. This is a really nice rule. Our community is all about real wealth. Real wealth is far more than just having money. It's about being the best person that you can really be. Being kind to others is a wonderful way to share the love and kindness out to the world. Aesop wrote a lot of fables. He lived in ancient Greece between 620 and 564 BCE. He wrote The Big Bad Wolf, The Tortoise and the Hare. Wow, this guy, amazing. He said, no act of kindness, no matter how small, is ever wasted. That is real wealth. Sharing your kindness with others is a really beautiful way to live. Morgan Freeman had a really beautiful quote too. How do we change the world? One random act of kindness at a time. You don't have to be rich to change the world. You just have to care. Doing one small act of kindness at a time is a beautiful way to live. I see so many community members in the comments helping other people. That touches my heart. That's so beautiful to see. What a community we have. Rule 174, the T-cube method, trend, timing, and trigger. We're going to be looking at the trend, and we're going to use the KS process to understand the true trend of the markets, crypto, and talk about an early warning system as well. Money can be invested anywhere, literally. It can go into a business, go into the stocks market, S&P 500 for example, or your country's exchange. It can go into gold or precious metals, Bitcoin, cryptos, wherever it goes. Really, what we do is to seek a return. The S&P 500 has come up 32% this year. Gold is down 13%. Bitcoin is up 250%. Crypto is incredibly volatile. It's always important to assume that things can change. And so I've put an early warning system together. Let's have a look at the Bitcoin trend. The first thing we look to is the KS model. It's a crypto technical trading model based on institutional price psychology. The really important thing with this model is to understand that we compare like states. In the bull market psychology, price is going up. It is supported in its upthrust. We can see the sun of the bull market, the sun of the bull market, and the sun of the bull market. Rect wrote a really cool comment. I just like to respond to it. In the bull market psychology, what happened is the rocket takes off. Rocket has some mid-air refueling, which causes like little mini crashes on the way up, but the rocket keeps on going. It hits the moon. You will hear so many people talk about hitting the moon. That's the rocket hitting the moon. That hammers in the bull market high. When it hits the moon says, get out of here, rocket, go back to Earth. And then the bear market starts. The rocket comes down to Earth. It has sort of mid-air refuelings, tries to get rejected from Earth, but it's coming down. When it capitulates, when it finally lands, that hammers in the bear market low. we have a thing called mathematically protected all-time highs. What it means is when the next cycle starts. Now you ask, Ken, what is a cycle? Cycles start from the halving. The halving event sends a shock into the market, making Bitcoin suffer supply shocks to increase its price. What happens basically, that sparks the bull market phase in terms of psychology. When the bull market exponentially increases, you can see back here in the 2012 halving cycle, you see that incredibly sharp movement up. This is a log chart. That's going parabolic on parabolic. It's moving up exponentially on an exponential chart. You can see it here from the 2016, just before the bull market peak, going up exponentially. That is what we witness towards the end of the bull market psychology. That's just a really very quick intro. You have three phases: bull market psychology, bear market psychology, and consolidation. In the bear market, it's darkness. When the rocket lands, it gets rebuilt, and consolidation begins, leading into the next halving, and then the rocket takes off again. And when it hits the moon, it will get repelled from the moon and come back to Earth, and so the cycle starts again. The most critical thing that comes out of the KS model is the requirement to compare the same psychologies. Compare the bull market psychology, overwhelming optimism, to the bull market psychology. Now, what does this mean? In the current bull market psychology, we cannot compare back to bear market psychology or consolidation psychology. Why can't we do that? Well, you can do it, but you actually will receive information that can lead you astray. In the bear market psychology section, the rocket's been rejected from the moon. Everybody knows it's gone too far. It's plummeting down to Earth. People are suffering horrible losses, and there's no end in sight. People try to hold on, but eventually capitulate, which means surrender. They give up, which plummets the price down to a point where people say, no, I'm not selling anymore. I don't care. Whatever. I'm holding. And then the price starts to go up. It's really important to understand the different psychologies that play are mathematically incomparable. Many years ago, I was a first and second year stats lecturer, and I had to explain to the students why a variety of graphs and charts presented by the media were just false and misleading. It was part of the syllabus. I know how to look at a graph, and the key is when people actually go across psychological states, they're comparing apples to oranges. That violates the law of mathematical consistency. I see it a lot on YouTube. I understand why they do it. Maybe they don't know, but coming from a basis and a foundation of hardcore mathematics, it's really important not to cross psychological lines. With that blueprint in mind, what we're looking at here is the current price action. We go back to the sunshine of the previous cycle and then the sunshine of the previous cycle. What do we notice? The trend is your friend. We've got 3 up thrusts. Here, 3 up thrusts. We have 1. We expect 2 more. Crypto represents the next essential upgrade to the internet. It's way more than a currency or a store of value. It's a completely different technology that is going to reshape the world, just as the internet did. The total global internet users, measured in millions, is this log graph here, up to 1 billion. We can see crypto growing far more rapidly than the internet did at the same relative time span. In fact, in just the past 6 months, the number of crypto users has doubled. It can be helpful to look at the KS BTC Longview model. There are 4 phases in each cycle. We're in phase 1. What does phase 1 look like? A lot of growth. And then what does phase 2 look like? Well, it's the bear market. You can see the price of crypto is going up and up and up. We're really early in phase one. An important knowledge gem to understand is that crypto is actually governed by fear. Fear of missing out and fear, uncertainty, and doubt. When the fear becomes a hype, a mania, just like the stock market is governed by the same rules. When too much euphoria enters into the market, we get these blow off tops, exponential price action. We haven't seen this yet. There's been no euphoria in the market. There has also been no capitulation. Capitulation hammers in the bottom of the bear market low. We haven't seen this yet. We're quite early in the cycle. Let's zoom into the current price action. We look back at the past cycle. This is Bitcoin's current price action just down here. We look back at the past cycle, the 2016 halving cycle. It lasted 526 days. We go back to the previous bull market psychology phase of the 2012 halving cycle. It lasted 367 days. Now what happened between 2012 and 2016? When people were in the 2016 market, they naturally thought that it would finish around the same time that the previous bull market finished. And that's fair, that's just logical. Oops, what happened? It went 159 days longer, 43% longer. Now, people expect this bull market, talk about history repeating itself, they expect this bull market to finish around mid-October, which is the same period of time as the 2016 halving cycle. That's really interesting. When you get a 43% increase from cycle this 2012 to this 2016, and you think that the current cycle will be the same as the 2016 cycle, that doesn't really make mathematical sense. People have reached out to me in the community and have asked me to explain why people are picking around October to be the end of the bull market. That's the reason, because they think it's exactly the same duration as the past cycle. What it means, if we zoom out a little bit, this particular past cycle peak, this time they expect the same amount of time. What is actually happening is something quite different. These bull market psychology phases are getting longer. The bear market psychology phases are getting shorter. The consolidation phases are also getting shorter. The halving cycle will still, in my belief, be maintained, but it's not as what most people think. I'll get much more into that as we get closer up here. But for now, that should probably answer a lot of questions. So returning to the current view, we can see price is around this particular level. We're expecting something around this band, this area, from at least 100,000 going up. If we see an exponential blow off top that reaches unsustainable levels, that would be quite reasonable to assume that that would happen. That's what actually hammers in these tops. It really depends how price reacts. We'll be tracking it very, very, very closely. People have also asked me, why do I believe a minimum high of $132,418? That comes back to mathematically protected all-time highs. As far as cycle to cycle to cycle, we have never violated a previous all-time high from the bear market. So what does that mean, you say to Ken? Okay, I'll answer. What it means is when we had this big ramp up in the 2016 halving cycle, the bear market low came down by 85%, but it didn't violate the previous all-time high set by the 2012 halving cycle. We expect the trend is your friend. We expect that to be maintained. If it's not, we'll find out. But the probability is the trend is our friend. That's what we work with. So the question is, why 132,418? That's literally the minimum value possible to not break the previous mathematically protected all-time high. If we look at Bitcoin relative unrealized profit, I've just drawn a number of ones here just to help you out. You can see we have a bit of a way to go. What I believe happened with this particular cycle, the Fed did so much money printing because of COVID and the fact that liquidity was failing across the US economy after the February to March liquidity crisis, which actually tanked Bitcoin 63.32%. Now that has been normalized. So what we're looking at here, this big sharp spike, we were just previously looking at this sell-off in 2020. This big sharp spike, which didn't cause any euphoria, has been normalized by this reversal in price action. That means we're about here. We can rock and roll to the top now. Another reason we know that we're not at the top is because we're not having these excessive transfers to exchanges for the number of Bitcoin. I know a lot of people say that this time it's different, but I don't really think so. I think that it's very understandable that people take their crypto off exchanges and put them into cold storage. The US liquidity crisis and COVID saw a sell-off in Bitcoin of over 63%. That's really bad. We need to have an early warning system to guard against anything that might go wrong to your portfolio. Bitcoin going down 63% means that the alts go down 95+%. It's a really scary thing. We must keep on top of that to keep you as safe as possible. Also, if you read the news headlines, you will still see that the Delta virus is everywhere, from the Fed to the IMF to the ECB to just normal news on stations. It's really important you stay abreast of what is happening. Markets don't just all crumble at once. They have risk-off events that can be detected. We're looking for these structural weaknesses, and it's going to be very difficult potentially for you to pull the plug. If I give you a risk-off event and I say the markets are not looking good, but I will tell you what I see, and then whatever you choose to do is quite understandable. But at least you'll have some sort of insight into it. Unfortunately, the thing across YouTube is everybody wants to just talk about prices increasing to the moon or decreasing to zero, but not a lot of people are balanced, just walking the middle of the road. The balanced perspective is my perspective. We can trade in bull, bear market, consolidation. It's all highly profitable. We don't really care what kind of segment it is in, but we need to make sure we're on the ball. Where Bitcoin came down 63%, the stock market came down 32.1%. There were signs, warning signs, weaknesses. We're going to be looking for these weaknesses. As a statistician, everything is driven by numbers from my worldview. Now let's have a look at the weekly trends. We're up 9%. We're really looking for this number to go negative. Fortunately, Indonesia, Brazil, the UK, Russia, Spain, Argentina are recording negative week-on-week decreases, well, increases. That is fantastic. Let's actually rank by population. We can see Indonesia decreased 19%, Brazil 12% down, Russia 2%, DRC down 15%, but we can still see, oh, poor Japan not going too well, plus 109%. We really want to see these cases all go negative in terms of weekly percent change. This analysis just gives us an idea of the vaccine doses administered and the fact that we are in the third wave. Fortunately, deaths are a little lower, but so many people have lost their lives. It's just really tragic. Let's have a look at the early warning system for monetary policy. It's always good to just do a quick check across the news headlines. Fed ramps up debate over taper timing pace. The governments could run out of cash unless the debt ceiling is lifted. This is always going on. How inflation threatens the recovery. Reduction in the Fed's asset purchases may not spark temper tantrum. US jobless claims remain at an elevated level. You know the problem with the news. People say just about anything. What we really want to do is look at the core data. We can see the federal funds rate has had an uptick. A little knowledge gem, you can look across these percentages to the right. So the federal funds rate has increased by 33.33%. That gives you some kind of concept on how to read the economy, independent of any news source. The real M2 money stock has decreased a little. The Fed has increased its reverse repo agreements. It's slightly growing. This is to take liquidity out of the system. The monetary base is unchanged. The Fed's balance sheet continues to grow. The gross domestic product, normalized for the US, has increased 0.26%. All employees, non-farm, have increased 0.59%. Corporate profits after tax, look at that, they are way up there. Real personal consumption expenditures are recovering or have recovered from that COVID low. The ISM manufacturing index is down 1.82%. Total public debt is really getting up there. When people talk about the debt ceiling, they're talking about this figure. You can see debt inside the US economy is growing very, very rapidly. We always have this near miss cycle happening. They go to the 11th hour, the 11th minute. Oh my goodness, it's not good. And then they tend to suspend the debt limit. Let's see what happens. I think there's going to be a lot of political infighting, just people trying to get different things passed through. But in the end, the US debt cannot be defaulted on. That would be absolute suicide for the US economy. The unemployment rate, as measured from the 1st of June, has increased 1.72%. We're waiting on this data to be updated. The employment level on the 1st of June was just slightly down. We can see continued claims has actually decreased quite a lot. It's down 11.1%. We can see the 5-year break-even inflation rate has decreased a little to 2.56%, quite a long way above the Fed's target of 2%. The 5-year forward inflation expectation rate is 2.23%, still above that red line at 2%. The 10-year break-even inflation rate is at 2.4%, quite above the 2% levels set by the Fed. When I say set by the Fed, what it means, the Federal Reserve Chairman Jerome Powell said that the Fed's price stability goal would be met when inflation was at 2%. So that's why we're noting it through these graphs. When we look at the TLT, the 20+ year Treasury bond ETF, what I would like to draw your attention to is this parabolic price behavior. See this exponential price behavior? That occurred around the time that the world was shutting down. If we see this kind of behavior, we're going to get worried. This sharp spike down was actually capitulation in the markets as well. We also would want to see that to give us an idea of when the TLT may indicate that the markets had bottomed out, especially in the case of Bitcoin, and that is our focus. Just keep your eye on this for an exponential increase. We're getting an increase, but it's not exponential. We're looking for an exponential increase. We'll monitor this very closely. In terms of the early warning system, you can see the 10-year Treasury note yield when there were problems inside the economy, when all the markets were selling down. Look at this absolute drop like a rock, and then the bit of a kickback. If we get into problems, we're going to be looking for something like this. I hope that helps. Looking at the 30-year Treasury bond yield, we can see the same kind of behavior. Sharp drop, recovery. We're not seeing that right now. Everything is looking good, but that's what we're looking for. If this starts to roll over down here, sharply spikes down, we know the system is in trouble. So far, so good. Having a look at the high yield corporate bond ETF, notice what happened when the economy got into problems. It just dropped like a brick. If we see this very sharp action occur here, we will know to risk off. That's the most intelligent thing that you can do. It does take an enormous amount of courage to pull the trigger and to sit on cash. When COVID hit, it basically shut down the airline sector and it wreaked havoc on tourism as well. Look at this sharp spike down. If we see any potential COVID impacts, we will expect to see something like that around the current price action. We're not seeing that. There's a certain amount of weakness, but there is a degree of support coming up here. We're not too perturbed about this, but we need to keep our eye on it every day. You can see how the transportation ETF suffered as well. This is an early warning system we're putting together here. We're not seeing any of those down shooting momentum. Everything looks fine. There is just a slight bit of weakness in the current momentum. We'll keep our eye on that, but it looks like it's hovering around that resistance line. That's good. If it was hovering around that support line, that would be bad. Everything is okay at the moment. If we look at the utilities, what we see is that utilities basically took off. They went parabolic before this particular crash. We'll be looking for this kind of fingerprint. What do we see here? Utilities are broken out from that resistance. Now, if they go up parabolic and they start to sell off, that can be a pre-warning to us. Again, it takes a lot of courage to pull your money out of the market, depending on what your circumstances are, of course. But from a trading perspective, we would definitely want to sit on cash. Let's cover gold from a different perspective. Before the sell-off started, gold rallied up exponentially. Just think about the utility sector. It rallied up and then dropped, rallied back. This big drop was our warning sign. That's really important to understand. We are going to get indicators. A lot of people will disregard, but we won't. It's really, really important. But do you notice that gold actually crashed along with everything else? Many people said that gold was a safe haven and everything would be fine. It didn't turn out to be the reality. After capitulation happened, gold really did very, very well. It's been in this rock solid consolidation downward bull flag at the moment. We would expect gold to resume back up. But let's keep in mind, if we get a sharp spike down, we really need to pay attention to that. And gold recently has been suffering dramatically. If we just zoom in here, we can see that this upward support is quite strong. Gold is also being supported by this downward support line that was once resistance. Keep this in mind. These kind of cradles tend to rocket shoot things up. If we zoom out with silver in mind, we can see this exponential uptake and then a really rapid drop. Not like gold's power. Silver was much, much weaker. But before the sell-off, if I just zoom in there for you, before the sell-off, we saw a clear break in this line. We saw negative air above that particular peak, which signified that things were going badly, and then that sell-off down to capitulation. So what's happening at the current time? Currently, silver has broken a technical level, trying to retain it, not doing too well. Let's keep our eye on silver. This could be a forward indicator. Nothing to panic about yet, but just keep things in mind. It's really useful to tell you the stock market is like watching grass grow. It's very, very slow moving compared to crypto. It's really important that we don't get too faked out by potential price variations. We'll know when it comes, we'll know. Let's have a look at copper. Before the sell-off started, we saw copper doing quite well, but then it broke down. Let's just zoom into here and have a look. It broke down on weakness and so much negative air. That's showing a very, very big problem. And then it's sold off sharply. Yes, you guessed it. I can't do tongue twisters. That's not my bag. Okay, what are we noticing right now? Copper is relatively okay, but we really need to keep our eye on it. Copper is very economically sensitive. Brent oil, before the sell-off started, was actually rallying quite well above that cradled support. You can see it sold down quite heavily, and it really signaled that there was a problem inside the economic system. When the sell-off started to hit, the capitulation of the stock market occurred here, but you can see Brent oil went much further in terms of requiring time to capitulate fully. We are basically back up to the pre-pandemic levels. Let's just zoom in here. Okay, what are we looking at? We are seeing some weakness. We're going to be looking for negative air. This is quite economically sensitive. Before the February 2020 sell-off, light crude oil futures broke their trend line. This trend line, negative air, rejected that resistance and was pushed down. This gave us a bit of a warning sign that something was very bad inside the economy. When the sell-off started here, capitulation occurred at the 23rd of March, but you can see it took basically until the 20th of April for full capitulation in light crude to occur. So what is happening right at the current time? We can see that light crude has been doing quite well. It's basically recovered to pre-COVID levels. It's just consolidating around this area, but if we see any really sharp sell-offs, that's going to be cause for concern. Let's have a look at this. I'll just draw one more trend line in here for you because I think this is really important. We're seeing overall weakness here. We need to keep our eye on this one too. Don't panic. The most important thing, we're just observing. The stock market does take time. It can take weeks for things to play out. We're going to be months ahead if we can be, at least weeks ahead. The DXY is also a really good indicator. Look at this. When the DXY was going up, it just literally crossed over support, crossed over resistance around here. When the sell-off started, people were flying into dollars. There was a capitulation in the DXY and then a shoot up. Now what's happening right now? We can see that the dollar has crossed this very, very long-term resistance line. It has another couple of resistance lines in here. Let's zoom in. It's making its way towards the top of that resistance. We'll just keep our eye on the dollar. So far, everything is fine. Everything is looking good. It's really important you don't prepare for a crash, except mentally. Crashes are always occurring inside the markets. The most important thing to do when they happen, we just pull the trigger and do a move to safety. That takes an enormous amount of courage. So far, we're not seeing problems across the economy, but it's really important to keep our eye on things. When problems do get created, and they will, it's just a normal part of market life, we have to be prepared to act. It's really good if you prepare yourself in advance, but certainly don't worry about it. We'll deal with it when it comes. From the Wall Street Journal yesterday, the Fed is looking to increase interest rates early 2023. That is still some way off, but it's really good to know their intentions. They said that they would give a lot of advance notice. They want the markets not to freak out and to price it in gradually. Now we're looking across the entire globe. We want to see how the market indexes are performing. From the front page of the Wall Street Journal, China's corporate crackdown is just getting started. Well, not so good. So basically, people that put a lot of money in China, they're very much at risk if they're from outside China. Let's have a look at the global business cycle. We can see China is in mid-cycle. What is mid-cycle? Growth is peaking, credit growth is strong, profit growth peaks, policy neutral, inventories, sales grow, equilibrium is reached. That is where China is. But so where do increasing interest rates occur? They occur in late stage growth. That's quite important to understand. That's why the Fed is talking about 2023. You can see the US is in sort of mid, just after recovery, and we can see the Eurozone, UK, Australia and Canada is just in recovery, and Brazil, India, Mexico, Japan and Korea are just on the border between early and mid. Let's look at the fear gauge of the market, the VIX. We can see the fear is decreasing. The Nasdaq 100 is increasing. It's rebounding off this support. The S&P 500 is also increasing. I've just overlaid the price of Bitcoin here so you can see how the stock market and Bitcoin are interacting. I'll just quickly show you for the Nasdaq 100 as well. Turning to the Russell 2000, the Russell 2000's shown a lot of weakness recently. It's just got above that resistance and turned it into support. It's important for crypto investors and traders to understand that the stock market moves incredibly slowly. It's so slow. I call it watching grass grow, but it's really important to understand that crypto actually moves 5.17 times faster with around 3 to 5 times the volatility of stocks. Just helpful, little knowledge gem. Okay, let's look at the Dow Jones. We can see the Dow has been rejected from that resistance. It's coming back to support. Canada's market continues to increase. China's Shanghai Composite Index sought to regain this particular support line, but it's failed. China's technology index is very much underwater. India's market is breaking out. South Korea's market did a breakout and it's just coming back for the retest. Japan's market has bounced from support. Mexico's index broke out from resistance and is now consolidating. Brazil's index continues to show weakness. UK's FTSE 100 is increasing in strength. Germany's DAX 30 is approaching resistance. Italy's index is resuming off that support with strength. France's CAC 40 is on a tear. It's doing really, really well. Australia's index is doing very well as well. Spain's index is improving. The Swiss index is above resistance. Singapore's SDI index is seeking to push off from support. Overall, when we look at the markets, they're pretty healthy. We don't see any real impacts as far as COVID is concerned at the moment. We don't see any real retracements. The Chinese markets have had a bit of turbulence, but that is to be expected with the policies that they're implementing currently. Apart from that, everything looks pretty reasonable. Now we've done a literal global walkthrough. Things are looking okay. We can see that the COVID cases are increasing, but however, monetary policy is not impacting the stock market dramatically at this particular time. We keep our eye on economically sensitive data every single day, 7 days a week, so that we can understand anything before others do. We're really trying to do an early warning system. If there's something else that you would like me to cover across, we're very focused on community-driven approaches to this channel. Please reach out and let me know. I'd love to cover it off. When we look at crypto stocks, we're going to look into the US market because it accounts for about $56 out of every $100 put into stock markets globally. Let's go through just a quick roundup of some news stories. Amazon is delaying return to office until 2022. The US taps Amazon, Google, Microsoft, and others to help fight ransomware and cyber threats. The SEC chief braces for a clash with crypto traders. This is about him Gary wanting to regulate digital assets to the same extent as stocks, bonds, and commodity-related trading instruments. Cryptocurrency compromise emerges for the infrastructure bill. That's pretty cool. That was a very real problem for the industry, and fortunately that looks to be on the mend. The issue in the infrastructure bill is to make sure that miners, network validators, and other service providers are exempted from reporting requirements. Just to help to explain that a little bit more, if we go into the Infrastructure Investment and Jobs Act, what they wanted to do is alter section 6045C1 of the Internal Revenue Code by actually putting in this particular clause D. Now, when we go across to the Internal Revenue Code and we look at that particular section, section 6045 returns of brokers, and we go down, we can see a change in language, a new subsection added in here, area D. Now, what that would be about, that particular subsection is too broad by its nature, and they're just trying to figure out ways to make it fit the intended purpose. Okay, let's get into it. Apple is maintaining support. Microsoft was showing a little bit of weakness. It's since resumed back. Google is seeking to challenge this overhead resistance and turn it to support. Amazon has shown a lot of weakness recently. It's just coming up to this resistance level. Facebook is gaining a lot of strength. It's rebounded from that lower level of support and is seeking to make this once resistance into support. Tesla has had a breakout. It's just consolidating currently. Nvidia is looking really strong. It's broken out and is challenging that previous high. PayPal had a lot of weakness recently. It's seeking to turn that resistance into support. Netflix is doing really well. It was pretty weak just recently, but we can see it's got some power in it now. Square is showing a lot of power, seeking to take out those two previous highs. Bitcoin is just underneath that structural resistance level. We can see it's gaining in momentum. Just a knowledge gem, as Bitcoin increases, no alt and crypto stock now, no alt or crypto stock can escape Bitcoin's gravity. We can see total crypto market cap, which is currently $1.624 trillion, has consolidated above this once resistance and now has resumed off. GBTC is seeking to regain that support. QBTC, the Bitcoin Fund of Canada, has regained that support on strong momentum. BitC, CoinShares physical Bitcoin, is still below resistance. The Purpose Bitcoin ETF has reacted really favorably, like QBTC. Now that is above support. ARK Innovation ETF is resuming off that support and seeking to gather positive price momentum. Coinbase Global has done really well. That cradle of support typically creates upward price pressure. That's certainly what's happened here. Galaxy Digital, well done Galaxy Digital, it's got above that resistance. MicroStrategy, well done Michael, the price is increasing. Riot Blockchain is still under resistance. Silvergate Capital Corporation, the price is testing that resistance, seeking to turn it into support. Marathon Digital is looking really good. It's getting above that once resistance and turning it into support. Voyager Digital is also above resistance and has turned it to support. Hive Blockchain is above this resistance and is turning it to support as well. Bitfarms is doing really well. It's above that once resistance, has turned it to support, retested, and resumed back off. Argo Blockchain is showing a little bit of weakness. Bit Digital continues to be on a tear. It's increased 21.04% just last night. ADE, the Bitcoin Group SE, is still struggling with price. Hut 8 Mining Corporation is getting above resistance. Well done, Hut 8. I hope you found the content useful. Everything I do for you is free. Please be aware of scammers. Thank you to our moderators for keeping our community safe. It's really appreciated. And thank you everyone for your beautiful contributions into the community. I do these videos to assist you to be more of a financial blessing to yourself and those you love. Please say hi and let me know where you're viewing from. And if you have any questions, if you would like twice daily updates 7 days a week on price movements in the crypto market, please subscribe to YouTube, and you can join Facebook and Discord, and you can follow me on Twitter as well. All of these groups are free. Crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there. Take care and see you next time. Bye for now.